Hello everyone. Thanks for joining for a weekly seminar, a webinar from ICM. Myself, my colleague Wael, thanks everyone for joining today. Well, today's topic where we're going to see today, which is understanding the Fibonacci tools on MT4 MetaTrader platform. Before getting to the deep discussion about the particular type of Fibonacci retracements and other parts. So let's discuss about the Fibonacci sequence. So Fibonacci numbers, that's the most important thing to know about how exactly to mathematically calculate it. So here the sequence are being found by the mathematicians Leandro Fibonacci. So he has been founder of this particular Fibonacci series. So derived from a problem in his famous book called Liber Abaci, Book of the Abacus. So basically abacus is a mathematical terms of numbers where you can see the calculation based on that. So sequence starts as follows here. You can see here for an example like 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, some extra that goes on this. So mainly while keeping a Fibonacci sequence is a series numbers where each number is a series which will equal to sum of two numbers of the previous one. So Fibonacci sequence is the most important to discuss because we need those numbers to get out of Fibonacci ratios. Without the sequence, Fibonacci series, sequence ratios cannot be exist. So basically the next number in the sequence is found by adding two numbers before. For example, here we can say like 0 plus 1, it's 1. So 1 plus 1, 2. So 1 plus 2, 3. So like this, the ratios, the sequences starts. So how to calculate here? Just adding one by one with the previous number. For example, here you can see here 3 plus 5, which is 8. 8 plus 13, 21. So it goes on like, for example, 13 plus 1, 54. So this is how exactly the Fibonacci series works. So based on this, where we are going to see what is the levels in ratios. Basically, Fibonacci ratio has been calculated. So in any trading, like a Fibonacci ratio have been used frequently by traders. Many traders use it. It's one of the major tools where to find out the market's targets or maybe retracements or maybe percentage of retracements or maybe the trending market. We can be able to find the correction, how much correction markets can give in the markets. So these are the main reasons where Fibonacci series has been used or Fibonacci ratio has been used by the many traders. There are set of tools based on the Fibonacci ratios. So some key technical analyst tools like Elliott waves theory, harmonic patterns rely heavily on Fibonacci ratios. Have you seen previous webinars, couple of webinars we have discussed about these patterns. So we have clearly explained how exactly the Fibonacci series has been used for these ratios. So the ratios have been calculated by dividing numbers in sequence. For example, there are some examples that have been shown here, how exactly the sequence, the ratio has been calculated here. So where you can see, for example, like Fibonacci sequence, most of the cases, the numbers have been related to that each. For example, you can say 35 by 55, we can see 0.618, which is equivalent to the percentage of 61.8%. And for 55 divided by 89, we can see 0.6179, which is 61.79%. The same way, you can see all other ratios. So exactly this is how exactly it has been inbuilt ratios which is applicable on a MetaTrader platform, where definitely one of my colleagues going to show about how exactly to plot the retracement, how to set the retracement, how to define each and every levels of the markets. When you're talking about the extension ratio, where I'm talking about both the sides, there is called retracement, where it's called extension. When you take the extension ratio, the formula works like this. It's exactly inverter of retracement, like 55 by 60, 34, which is 1.618, which is almost 161%, which is 89 divided by 55, which is a 1.618. So this is how the formula works for both for retracement as well as for extensions. So these are basic about like how exactly Fibonacci numbers works and how exactly calculate the Fibonacci series and ratios to be calculated. Where you're going to see next is Fibonacci retracement and extensions. So among this topic today, like Fibonacci retracement is one of the major important one. As I said, like many traders used to have this type of retracement because retracement presents a temporary reversal in the direction of the price, even which goes against the major trend. It also called as correction, or we can say on a principal trend. When the market is on the one side, we try to find out where to enter the market inside, to back again to buy, or maybe in the downside market where to enter again on the selling side. So retracements are usually a short-term change within the major long-term trend, while the reversal signals are the end of the larger trend and the beginning of the new trend. So this is how exactly the retracement has been used. So here the Fibonacci levels are fixed numbers that can be used by the traders as a point of support and resistance. So many traders use as a support resistance. It's very important, like the breakout levels were important point where the market is going to reverse or going to bounce back from this level. So the traders use as a point of support and resistance. Once you are familiar with applying the Fibonacci tools, it will be very easy to reduce the levels. So that's most important thing. So you have to know how you use the Fibonacci tools. The Fibonacci tools is a major important to anyone to understand the particular way of understanding. As a retracement occurs when the market is moving in a certain trend and goes for a corrective wave. So a trader could use retracement tools to check the possible levels of continuations. So by using the retracements, obviously any trader can be able to continue in the market. For example, you are in a bullish trend and the market suddenly has a correction back to downside, and you want to get into the market back again into the market. So the levels are there, like to give the levels back 23%, 31 or 51%. What are the levels? You can try to buy, push back or buy back again from the same levels. So this is how the traders use the retracement effectively to get into the market, either side of the bullish market or maybe with the bearish markets. So when the price is poised to the break high or low, a trader could use the extension tool to set the targets, mainly retracement to enter the market, to buy back it or sell it on the downside trend. But in case of extension tool, which really use many traders to set the profits, to extend the profit or maybe trail the profit to the extending on the higher level of the markets. So these are basics about this, and my colleague going to join for further discussion. Thank you.
Hello everyone, and thank you, Syed. Hello everyone, and thanks, Sai, for the explanation. So as I said, the Fibonacci sequence is one of the top tools, or Fibonacci ratios are among the top tools used by traders in order to detect some key levels in the market where they can base their trading decisions on. So as I talked about retracement and extension, I'm going to talk about the expansion, which is almost similar to the extension, but it's practically it's a little bit different. So we're all used to drawing retracements, which is just drawing the Fibonacci from point A to point B, or from a high to a low. And after that, you just set the Fibonacci in order to check the retracement levels, or you can even draw it on the opposite side in order to draw the extensions. What about the expansion? It's a bit different. We know that the market moves in waves. So we have corrective waves and impulsive waves. Impulsive waves are the ones that move with the trend, and they're usually strong and show some huge momentum, while corrective waves are show retracements and corrections. So what we can use expansion for is just relying or detecting the third wave. So for example, I'm just going to demonstrate on the same slide. So for example, this is point A to point B. The price is moving from this point A to point B. So we come and just plot here the Fibonacci retracement in order to see the Fibonacci levels that will be available. For the Fibonacci expansion, we just have to draw point A to point B, which is wave 1. And then also we have to detect point C, which is showing the second wave. So this is wave 1 and wave 2. And then the Fibonacci expansion will give us a prediction where this wave, the new impulsive wave, could end. So if you just recall what we talked about, the harmonic patterns. In harmonic patterns, we used to explain the ABCD formation. And this is similar to the A. So for example, for harmonic patterns, this is the X move. So this is X, A, B, C, and then this is the D, where it could be the potential reversal zone for a certain move. So a trader would usually use the expansion in order to try and find where the market could be reversing from a certain move to the downside or to the upside. It depends on the direction of the impulsive wave. So to recap, Fibonacci expansion is used to predict the end of the third wave. The tool is drawn on two waves instead of one. You should determine the first impulsive wave and then another corrective wave, and set the expansion in order to predict the target of the coming impulsive wave. And expansions, they are used to help detect potential reversal zones where are familiar, or the PRZ that is very familiar for those who are or who rely on harmonic patterns. Now let's move to another tool of Fibonacci. It's the Fibonacci Fan. It is similar also, it relies on these levels, but there is a different way. We know that the Fibonacci levels, they are vertical levels. However, the Fibonacci Fan, it shows them diagonal. It has the same series, so I'm just going to demonstrate later on how to draw the fan manually in order for you to get the concept. But also, similarly to other retracement and extension with other tools, the Fibonacci Fan is used to detect some support and resistance levels within a certain move, so a trader can base his or her trading decision on. Moving to the Fibonacci time zones, the Fibonacci time zone relies heavily on time. It doesn't have anything to do with price. It is drawn by detecting a swing high or a swing low. So you just draw the trend line from the higher point to the lowest point, or vice versa. And based on this, you're just also having a projection based on the x-axis or time. We will have vertical levels, and these vertical levels will be labeled as 2, 3, 5, 8, 13, and 21. These are the rest of the sequence, or the beginning of the sequence is the 1 and 2, the 0 and 1 were omitted by Leonardo Fibonacci. So we start from here. We use the 0 and 1 to base the projected levels, which are labeled by 2, 3, 5, 8, 13, and 21. These time zones should indicate a significant area where something could be happening, maybe the end of a swing high or the end of swing low, or any potential reversal. But this should be done, or would be done based on time only and not on price, like we've seen in the expansion. So now I'm going to move to the MetaTrader 4 platform to demonstrate to you how to use the Fibonacci retracement and expansion, Fibonacci fans, and time zones. I can see there's a lot of questions, but I will just keep the questions to the last. Okay, we'll just keep the questions to the end of the webinar like usual. Okay, so moving to the MetaTrader 4 platform, we're gonna use any different chart. Let's $1 or gold, since a lot of people they're interested in gold. So for the Fibonacci retracement and extension, it's very easy. You can just use the Fibonacci icon drawn here in order to draw the retracement. So the retracement is drawn within certain highs. In order to detect if it's hard to you, or you just want to detect certain swings, you can also add an indicator. It's called zigzag. This zigzag indicator will just show you the tops and bottoms, the swings, and based on this zigzag you can draw the retracement. So for example, the zigzag is showing me this move. I'm just going to thicken the line for the zigzag. Okay, so for example, I want to check the retracement of this move. I just go for here from point A to point B, and then I check the retracements here where the retracement levels are. You can also add something to the description in order to have the price and the level itself. Here you can see the level 0%, 23.6%, 38.2, and etc. You can just go to the Fibonacci properties, Bible properties, and beside description here you can just add the percentage and the dollar sign, and with this you will get the price level next to the percentage ratio, the Fibonacci ratio. So it is very easy, and sometimes it's useful for clients instead of just having it or checking it manually. So you just add the sign, and here you can see the price levels available. So currently, if you're just looking for retracements at the prior move, you would have been waiting for a retracement towards 1938 and 1948 in order for continuation for the market to go down, and then this happened here. The market retraced near 23.6% the first time. It really turned back lower to 0%, and vice versa. So you can use the zigzag in order to check the retracement levels. Also, there are the extension levels where you can just draw this in the opposite way and you just go for extensions. You can add whatever level you want, so you just double click both 5 properties. You can just add, for example, 1.236. So this is the 123.6%. You just go percentage in dollar, and then voila, you have here the level, which was exactly the bottom of the market yesterday, 1905. So if you just use the Fibonacci extension to detect where the market could be going after breaking the low of 1921, you can see that the market dropped exactly to the 123.6 level and then reversed from there higher. So this is a small example of how you can use the Fibonacci retracements and extension. Also for the Fibonacci expansion, you can just go to the other side. I'm just going to delete the zigzag. For expansion, you just go for insert, Fibonacci, you go for expansion. The expansion, we said that you need to detect 2 waves, so an impulsive wave and a corrective wave. So for example, this is the Fibonacci, this is the first wave, the impulsive, and then let's take into consideration this is the corrective wave. It's going to end here. It's just an anticipation. So these levels below, there are the potential reversal zone levels. So a trader would be expecting the market, if the market goes down from here, for example, and then the market moves down, so a trader would expect another reversal from here, or again from here, or from lower levels. How did we how did we obtain these levels? So this is just a calculation based on the length of this wave. So this is wave 1 here. So so the length of wave 1, I'm just gonna use this here. So if we just go for this length, so if you just drop this from the top, you can see FE 100. It means that from this point, if the market drops, 61.8% of the size of this wave is here, and 100% of this wave is here. So if we just have equal legs here, so another move lower, similar to the same size or the same length of this wave 1, we will be ending up with a reversal near the 100 level, which is 1860. So this is in small example how the Fibonacci expansion moves. It just takes into consideration the length of the first wave relative to the end of the second wave. So it just counts another same length of the wave 1 from the ending point of wave 2. So this is the expansion. It's very, very easy and straightforward. Also, you just need to detect 1 and 2 waves in order, the first wave and the second wave, in order to go for expansion. We're going to talk now about the Fibonacci fan. I'm going to draw the fan to you before adding it. So let's take into consideration that we're drawing the retracement from this level to this level. We're currently at 50%. So if I'm going to draw the fan, what I have to do is just set a vertical line here. And then from this top, I just draw a horizontal line, a diagonal line to this cross, and then another diagonal line to this, and another diagonal line to this level. So these are the 38.2, the 50%, and the 61.8 level. If I come here, I go to insert Fibonacci fan. I just go to the same point, to the same upward point and the same lower point. I can see how they are coinciding. So this is the concept behind the fan. So the fan, instead of doing this manually, you just come here, go for Fibonacci, the fan, and just detect a high and low point, and then the fan will show you these levels. You can see here how the market retraces exactly to the 38.2% level, and then corrected lower, and then another retest to the 38.2 level, and then failure, and then on the break of the 38.2 level again, the market rallied to the upside towards the previous high of almost 1950. So this is also how you can use the Fibonacci fan. Moving to the Fibonacci time zone, it's very easy. You just go for the time zone. Also, you can select from point A to point B. So this is giving us, I'm just gonna choose a smaller swing. Let's take into consideration the sharp drop in gold. So I'm just gonna go for point A here and then point B here. You can notice how the vertical levels are drawn. So 0, 1, 2, 3, 5, 8, and then here we have 13. Besides, so we have 13, and also other Fibonacci levels: 13, 21, 34, 55, 89, and etc. So what usually means, or what the Fibonacci time zone could hint is that there could be an end for a certain swing after on a certain vertical level, but it's not very reliable. But it's just one of the tools that are available that you can use along with other tools. So this is just in brief how to use the time zone. It's just it can help you just detect certain cycles or certain swings. So it hints, for example, we drew from 0 to 1. This is the swing. So if you're just relying solely on the 5 time zone, it means that when the price hits the second level or the vertical level 2, it could mean that the market could be reversing. So a trader would have expected the market to move lower from here on the touch. So a trader would expect the market to move lower from here, for example, and then let's say it touched the price again at 3 here, and then another move higher to 5. So this is the idea behind the Fibonacci time zones, is that every time zone or every level, every vertical level could hint for a certain reversal in the preceding trend. So this is in brief the Fibonacci tools that are provided on the MetaTrader 4 platform. If you have any questions, please write them down in order to answer them. And I'd just like to remind you that all the information, analysis, news, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to sell or to buy any financial instrument. And ICM doesn't provide any investment advice. Okay, so we had the questions first. I'm going to start with the previous questions. Is there any confirmation that meet when I'm going to enter the trade? So usually a trader shouldn't rely only on the Fibonacci retracement or Fibonacci extension level in order to detect to just take his decision or her decision. Usually a trader must find, for example, a match with the Fibonacci retracement. So for example, the retracement matched with the previous resistance or previous support, and also it matches, for example, with a certain moving average. So the more inputs we have for this certain level, the more valid it is to be used. So for example, let's say we have at the 61.8 retracement, we have also a certain support found by picking a bottom or a top, and also let's say the 100 or 200 period exponential moving average is available also, or meets or coincides with the level. This could make this level more valid to investors. So always usually make sure to use more than one tool or more than one technique in order to choose your levels and detect your trades. Okay, I believe there are no more questions. So if you just have any question, just send an email to webinar@icm.com or support@icm.com, and we would be glad to help you. Thank you all for joining today. Sai, do you have any words to add?
All I'm good.
Perfect. Thank you all for joining, and stay tuned for more webinars in the coming week.